You know, I've given up giving prices to people because people on the internet, they're just not nice. And so you get, oh, Raoul says this, so-and-so says that, it didn't do that. So I'll phrase it a different way.
Raoul Pal, the founder and CEO of Real Vision, is a prominent figure in the cryptocurrency industry, boasting extensive investment experience and a background as a former executive at Goldman Sachs. Pal is renowned as a macro expert and a leading investor in digital assets. Over the past decade, he has dedicated his efforts primarily to analyzing macro trends that influence crypto asset prices, sharing his insights with fellow investors. As with any cryptocurrency enthusiast, Pal eagerly awaits the anticipated 2024 crypto bull market and the potential advantages it promises for investors and the industry at large. Drawing from his tenure at Goldman Sachs, Pal foresees a significant upgrade to a new financial system built on a robust computer network in 2024. This upgrade is expected to not only attract a considerable number of wealthy institutional investors, but also mark the pivotal moment when the digital asset space gains widespread acceptance. Pal predicts that the influx of new investors, coupled with the return of those who withdrew during the challenging periods for cryptocurrencies, will catalyze a series of developments positioning the industry at the forefront of global finance. Recently, Pal participated in an interview with Laura Shin on the Unchained crypto channel. During the conversation, the Real Vision CEO shared his price forecasts for Bitcoin and two other prominent cryptocurrencies amidst the ongoing bull market. Additionally, he discussed three significant scenarios he believes may unfold within the next 12 to 18 months, two of which are notably optimistic and could propel cryptocurrencies like Bitcoin and Ethereum to unprecedented levels of growth.
Yeah. So again, we've got this foreign direct investment coming in. So where is that capital going to be put to use? And what is going to be the big unlock? My mental model for this particular cycle is the everything, everywhere, all at once cycle. Because if we think about it, $67 billion went into VC, into the space in 2020 and 2021. That money has been given out to founders who are building all sorts of applications and projects and everything else. Some of them will be infrastructure layer, some will be applications layer, and everything in between. And if you see the focus of where most of these teams are working on, it's kind of everywhere. So we're seeing the asset management that the fiat world companies are building on rails from crypto land. So, this is Franklin Templeton. This is all of these people looking at tokenizing real world assets. I think that starts, the first wave of that starts. Then we're seeing at the other far end of the spectrum is everybody's focused on gaming because there's a huge audience there. So somebody's going to crack gaming in some respects. And pretty much every protocol has got teams working on that. We've got in the middle, things like compressed NFTs and Solana, I think are a much bigger deal than people understand because I think it allows for ticketing. And ticketing is at scale consumer application of blockchain, of which you don't need to know it's blockchain, which is what the space has been waiting for. We've seen some attempts at social media and other sides of that. Maybe we'll see more of that. The brands haven't stopped. So we're still seeing the luxury fashion brands in the NFT space. And I think we'll see a continuation of that. We've also seen the car companies, sports teams, and others. So I think that continued space builds out as well. So I think it's more the applications of technologies than technologies. I think we've also got the identity idea that's, there's WorldCoin, there's a few people who've started in that space, and then using zero knowledge proofs, which came around in the last cycle, the applications layer from that. So I'm just thinking it's actually going to be broader than people imagine. And it's going to be more inclusive because we've now got this trade deal, the ETFs, because I think, we've got the Bitcoin one certainly coming, and it's a pretty high chance we'll get the ETH one. I've given up giving prices to people because people on the internet, they're just not nice. And so you get, oh, Raoul says this, so-and-so says that, it didn't do that. So I'll phrase it a different way, is we're seeing a much earlier ramp in the cycle than we've seen in the past, which is very interesting. It's very rare to be this strong this early in the cycle. Now, we are front-running some of the capital flows, and so there's probably some correction that happens by the rumor sell the fact. But I think if the space continues like this and we start getting monetary easing and the other conditions that tend to jumpstart the business cycle again, then we should see a very strong 2024 and most likely a strong 2025. The business cycles have been almost like clockwork, 2-year up cycles, 1 year peaking, 1 year down. And that corresponds. What's amazing is the Bitcoin halving cycle is the same as the debt refi cycle, which is, I think, what drives everything. It's the same as the election cycle. They're all the same thing. So, if that continues to repeat, then it should go until 2026 when that should be a bear market year. But, let's see. So I am obviously very bullish. I don't know. And I was talking to Nova about this yesterday. I've got 3 outcomes in my head that I'm juggling with. The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 100,000 to 200,000 range, and, all the other assets accordingly where they are on the risk curve. There's a 20% chance this early start is signifying something much bigger, which is the larger adoption and the more capital into the space, which leads to larger price rises than people expect, because people are quite scarred because the last cycle seemed shorter than most people expected. Everyone thought there was another final leg higher, and that never really happened. The kind of 100,000 Bitcoin, the laser eyes idea never got there. But maybe this time the shock is for excess returns beyond expectations. The other side that I grapple with as well is, well, maybe the whole cycle's front-loaded, and in fact it's shorter, but more violent in 2024. So those are the 3 scenarios that I'm juggling in my head with, but 60% probability is does what it says on the tin. For retail, it's just price action, and what's likely to happen is the moment the Bitcoin ETF is launched, the market will focus on front-running the ETH ETF. If the previous front-running made money, they'll do it again. So retail will get very interested. And, ETH's a broad, deep ecosystem, and people are happy to get exposure to it. The institutions, it depends whether they give the yield of ETH in the ETF or not. If not, a lot of the institutions would prefer to own ETH itself, because then they can stake it and get yield.
Huh.
Because if you don't give them yield, some asset manager who launches the ETF's going to get rich. BlackRock, they'll make all the money because they'll get the ETH staking yield, and they don't give it to the ETF holder. And we've seen that very commonly in ETFs in the past. So I think that's the thing, because when I speak to institutions, they get ETH because it's just like, here's a bet on technology. It's a broader based thing, and we get a yield, so we can just sit on it, which they don't get with Bitcoin, but they understand the Bitcoin story as well. So they understand there's 2 different things here at play.
Oh, this is...
Figure this out pretty fast, because the people who are going to add an ETH ETF into their portfolio are reasonably advanced, or they're RIAs because they got retail clients who want it. The people who are much more cautious, but they want crypto exposure, will definitely go for Bitcoin. So I think there's a level of sophistication that means that they would most likely ask the question is, how do I get the yields to me? But it depends, because the markets are pretty quick to arbitrage these things out. So somebody will launch one that gives you half of the yield, and eventually you'll get the whole yield. But, I know asset management firms, they will try their best to keep that themselves, because it's a very lucrative product. If they can capture 4 or 5% just by launching an ETF, I mean, that's the holy grail for them.
Pal expresses strong optimism about the cryptocurrency industry as we approach 2024, as indicated in one of his recent posts on X. In the post, Pal examines the imminent movement of a significant portion of traditional finance into the cryptocurrency sector. Describing cryptocurrency as the most forward-thinking asset class in the markets, Pal highlights how the industry has begun to factor in increased liquidity and ongoing challenges within traditional banking systems. Quoting from the post, Pal emphasizes that Bitcoin was conceived to provide an alternative to the conventional banking system, laying the groundwork for a new financial system centered around crypto. Over time, this new paradigm attracts migrants seeking refuge from debased fiat currencies, conflicts such as war, or instances of wealth theft, all of which prompt mass migrations. Pal notes a continuous influx of residents into this new economic landscape, with 425 million full-time and part-time participants over the past 12 years. This figure is steadily growing at an average rate of 100% annually, despite regulatory hurdles. Pal encourages viewers to enable post notifications and like the post for more content of this nature.